Vivek or
Okay. Hello, everybody. Okay, here we go.
Yeah,
Jordon's on there as
So you
well.
good?
Okay, yeah, we're on.
Okay.
All right, thank you, sir. Appreciate it.
All right.
Okay,
All right,
bye-bye.
good luck. Bye.
Hey, Jordon. Jordon, will you have control? Do I need to give you control at some point?
Yeah, if you give control to the desktop.
And where everyone's going to see. Everyone right now knows that I'm not the greatest. They're laughing, but I'm not the greatest, everybody, with Zoom. My assistant isn't here today, so bear with me, everyone. More, would it be more? No.
Just
Where would
right
that be,
click
Jordon?
on desktop and hit make host.
Oh, desktop. Does that work or no?
Not yet.
Oh, I see. How about that? Okay, I'm going to hit that. Is that right?
That's looking good.
Okie dokie. Everyone, we've got about 3-4 minutes before we go on here, so just bear with me. I'll go ahead and turn my just turn that off until we're ready. Give it a couple more minutes, folks. Just want to bring everybody in. Okay, I'm gonna go turn my screen on. Okay, so Jordan, you will have control, right?
Yes, sir.
Okay. Hi, everyone. Just know you're coming on here today. You were invited to our meeting. I appreciate you coming on here. A lot of people over the time, I've been doing some dinner seminars around the last month or two. Some of you might know Jordon in the past. He had worked with me on some other alternative investments. He went away from some of the companies he was working with because he had gotten heavily interested and dealing with investors on a hedge fund side, hedge funds. And actually, when I was talking to Jordon at first, I had the same reaction most people did, was like, you know, I've seen movies with hedge funds and there's those shows like Billions and it's all the drama. And I'm thinking, oh my God, what is this about? This guy, what is he getting into? And then Jordon and I have known each other for years. He's a really sharp guy and very solid person. in my industry. And once we spent some time and he explained it to me, I was like, doesn't sound like anything that I've seen in the TV shows and all this stuff. And so in the last couple of months, I've really come across a lot of investors who I feel probably were more his niche than mine, to be honest. One thing I'll say, and he can talk about it, is what's very interesting with hedge funds is really about the access to liquidity. A lot of the products that I've sold in the past, definitely one of the issues that I know people have with it is, oh my God, I got to put money in here. I may not see it for 5 years or 7 years or 10 years. It's a long term. That's why I like a lot of retirement funds for what I do, because usually people aren't going to touch that money for a while. But even with that said, there's an uncomfortability factor for people because of the fact that they're just like, I don't know if I can do a 5, 7, 10-year commitment. With a lot of hedge funds, the thing that I noticed is, and Jordon will go more into this, is that liquidity a lot of times is like a year. So you can test out certain hedge funds and get in. And with most of them, you wind up having a situation where, you know, if it's not your cup of tea, you might be able to get out in 12 to 18 months, and you gave it a chance with minimal amounts. Now, here's where the game changer is for where Jordon came in and piqued my interest, because the feeling for me was, as a person who's heard about hedge funds, is you got to be some multi-millionaire, kind of this VIP kind of club thing where you got to be worth millions. They're not going to pay attention to you unless you've got millions, and then you've got to put in $100,000 or $200,000. It's a big ask, right? Most of my clients are accredited investors, meaning that you are worth over $1 million, but at the same time doesn't mean you're worth 10 or $20 million. And a lot of you don't want to commit hundreds of thousands of dollars to any idea, no matter how well it sounds on paper. Jordon was able to come to me and say, actually, through people that he's worked with, because they knew the kind of people that I worked with, they came to me a while ago and said, we want to tap into the type of resource that you have, where people might want to invest $25,000 or $50,000 to start off. And I said, yeah, that's great. Most of my clients like to hear about new products, and when they come into a new product, they really don't want to put more than maybe $25,000, $50,000 into something to really test it out. And in their case, if they're worth $1 million, we're talking about 2.5 to 5% of their net worth, which is a great chance to just kind of really put your toe in the pool and see what it's like, right? And then if you like it over a period of time, you might discuss putting more money there. So with that said, that's about all I can say, because I'm not licensed in hedge funds, and I don't work in that space. Jordon knows much more about this. So what we're going to do right now is I'm just going to, the next couple minutes, ask him some basic questions. This is completely unscripted. I talked to Jordon earlier today. The way I like to do these things is, let's not make it seem like it's an infomercial. Let's just have a chat. So Jordon, tell everybody here what is your company, and then explain to everyone in the most basic terms, what is a hedge fund?
My company, by the way, Ben, thanks. Great intro. Yes, we love the live talk as well. The company is called Daikon Asset Management.
Okay, and then what? And I think you might be a little low. I can't. Is anyone else having your volume? I don't know if it's on my side, but we'll see if we can hear you. Is the second thing is, tell me what is a hedge fund? What does that mean? Just the basics of what it is. What is that?
Yeah, what is a hedge fund? Okay, so there's all these different things that people call investment vehicles. You could have a hedge fund, you could have a VC fund, you could have a private equity fund, and all of these are very specific things and ways that people go to do investments. The thing that makes the hedge fund different from all those other vehicles is that we're looking at products, spaces, investment things that are much more liquid. So what does that mean? That means we're not going in and buying an oil well and holding it for the next 5 years, and you just hope and pray you get your money back based on the price of oil. We're simply going in and we're buying instruments that allow people to get in and out within, like you said, that 12 to 15 month time range, and give them a steady return completely outside the stock market. Now, when people talk about hedge funds, you're right. A lot of them think, gosh, that sounds really risky. Why would I ever want to do that? Unless I've got millions of dollars to spend on one thing. Well, the answer is not all hedge funds are created equally. In fact, almost every single hedge fund is really, really different. And the way that we are very, very different and that we show value to investors is we give them access to the alternative asset space. And what does that mean? Well, it just means it's a way for people to invest that one isn't with their broker or their Edward Jones guy or their registered investment advisor. We're not selling stocks, bonds, and mutual funds. We're giving people access to a space that performs in a way that is absolutely nothing like typically traded stuff. So whatever the stock market does, it's going to do, but that will never have a bearing on what we do.
Right. Now, your hedge fund, I know you deal with a couple of hedge funds, and we'll go specifically into the life settlement arena because that's where I've been. And a lot of people on this phone call are going to say, oh, geez, life settlements. But the issue here is they're quite different. Let's take a look at, for instance, where I've dealt with in the past, what I like to call the transactional side. You call it as a closed-end fund. But I think as my clients understand that they're buying portions of a specific policy, they're buying portions of many policies, and then they're beholden, where a lot of my clients have realized they can get burned is that if they're not partnered up with a good company that says what they're going to do, it gets kind of dicey, right? And it gets very chaotic. Really, I would say the main issue there for these people is the premium call, right? When it comes time for the premium call with some of these companies in the past, they say they're going to do X, Y, Z. And then what happens is they may not be very reliable, and the clients are left with a lot of headache. I mean, the company we dealt with in the past recently is very good, Equilife, because they've dealt with a lot of that issue. But other past companies, I can't say the same. They just kind of, they're your best friend when they bring your money in, and then when it's time to deal with the part of the issue like premium calls, it can be a headache. The same thing is on the other side when there's a maturity. It can get very confusing. There's a lot of confusion. And so these are the parts that people go, in theory, I love the idea of a life settlement because it's alternative, it's non-market based, it's non-correlated, but it seems like these companies just don't have their stuff together, shall we say. When it comes to hedge fund in the life settlement space, none of that is a factor, right? That's what the hardest thing I try to get people to understand here is that they are not attached to one policy. It's not how you work. The money goes into the hedge fund. The hedge fund then buys policies, and the hedge fund is responsible for premium calls and maturities and all that. And all you're doing as an investor is you're just getting a return per year based on how that fund works. So go ahead and talk about all that.
That's correct. So what the hedge fund really is, when you distill it down to its very essence, an investor may say, okay, well, what am I getting if I give you $25,000, $50,000? Well,
Right.
What they get is they become a subscriber or a LP. So they're a partner in the fund. They actually own a piece of a business that's going out and doing this activity. So whenever that activity gives everybody some kind of return, some kind of performance, then they're going to participate in that performance on a pro rata share basis. So that just means if the whole fund is $1 million and someone has in 10% of that or $100,000, they own 10%. And if the fund makes $100, they make $10 because that's their share of the money that's been made. And what's beautiful about that is they can come in and they can participate. And after a year, if they want, they can say, Jordon, it's the best thing since sliced bread, but I'm going to go out and now I'm going to go buy a piece of property or do something completely different. Where when you're investing in that, I think you call it the transactional space, when you're doing that, it's still fine. It's a little bit of a tall ask to say, hey, I'm going to need you to stay here for the next 6 to 8 years. Maybe that's good for some people, but a lot of people want to have that flexibility to do other investments in addition. So even in our documents, Ben, it says, you investors are not responsible for premium calls. It's 100% us. And that's really the beauty in this is as we bring in money every month, we're going out, we're looking for policies. We're working with our managers who manage our money and other people's money. And they're saying, hey, we're going to go in there. We're going to find the highest quality policy we can to bring us the largest amount of return. But as you know, a lot of these policies are not bought at face value. In fact, they're all bought at a discount to value. So we don't even have to spend $1 to make $1. We can spend less than $1 and make money for the fund. So if we get $100,000 in any given month, we're only going to spend maybe 20 or 30% of that. And the rest just stays in the account. And that's how we pay premium calls and things of that sort. So it's a lot more flexibility than the products that you may be used to.
Now, the other issue I think people understand if they've ever bought into a life settlement before, they go, well, Jordon, I've had policies go long, and how isn't there exposure for that here for you guys? But I want to explain to them that there are two ways that you guys make money on this. One of them obviously is maturities, right? And you are, unlike the companies that do it transactionally, they buy it, and then once the client buys it from them, the company doesn't, no offense, I'm not the company, not your company, but transactional is kind of like, hey, we don't really care because we sold it. You guys, your entire credibility is on the line here to see that it performs, because people need to understand here that part of the way that a hedge fund makes money is on performance. Right. So that's what's nice, performance based. You have to see that these things come to fruition, or you don't get paid, because you're making money on how you perform, which is great. That's the great model here, that you want to pick the best policies, the policies that will pay out, because the bottom line is the only way you're getting paid realistically, or one of the main ways you get paid, is based on performance. Correct?
Yeah. Yeah. So we get paid in two different ways. And the way that we get paid the most is by performance. The other way we get paid is through a small management fee. Yep. And so in other words, if that portfolio underperforms, we're not making nearly as much money as we should. Therefore, we are incentivized to, you're right, buy the best policy and manage it in the best way possible.
Right. And then the second thing that people have to realize is that they don't realize that what you guys do, because I know other people in the hedge fund space, we know them as well, is one of the main ways you guys deal with it is actually selling off policies on a routine basis to wealthy investors who are looking for a certain type of niche, or to close-end funds, right? So like there's a closed-end fund out here that says, we love 82-year-olds with these issues. You guys can go out there and on a Monday say, yeah, I know I can buy this because I can flip it to a guy next week. And even if we make an 8% profit on that, we did it really quickly. And those earnings wind up going to essentially benefit everybody. That's part of your performance. And then it also goes to the investors. So people have to realize this is not just a buy and hold for you guys. You guys are buying and selling all the time, correct?
We are buying and selling, more buying than ever selling, because really a lot of times what happens is someone says they want to buy it, but we get the policy so cheaply that we'll only sell if it really makes sense.
Right. Makes sense.
Yeah.
Okay, so what I want to do now is you have some stuff that you want to present to people on your fund. I know you also have another fund. Can you talk about that one yet? I don't know if the other fund is allowed to be taught because it's in process. Yes or no? Can you talk about that?
Yeah, we could absolutely talk about that a little bit today.
Okay.
Yeah, so it's something I'm really excited about.
Oh, it's amazing, folks. It has nothing to do with life settlements. That's why I want to call this to attention, because it's pretty cool. Why don't you just go ahead and take it from here? I'll turn my camera off and you just take it from here and do your thing. Okay.
That sounds good. Yeah. All right, gang. So everybody should be able to see my screen pretty well now. What we're looking at here is the website for Daikon Asset Management. So Daikon Asset Management is a company in the life settlement space. What we do is we have a vast network of managers and capital and access to the life settlement space. So what we're doing is we're looking to give people a pure play exposure in the life settlement space. But instead of just working with one manager, through us, you'll have the opportunity to work with multiple managers, because we are looking at the people that have the track record, that have the business flow, that have the contacts to go out there and really create opportunities for our investors. And when I say opportunities, what I mean all the time here at Daikon is we are buying life settlements at a very steep discount to what they would trade if you were to say, just go to any life settlement company or provider that was selling this product. You'd pay a lot more than what we pay, because we have all of our money in this and we're able to buy multiple policies every month. And that's really how the business works. So what I want to do here is just show you my quick little slideshow. So again, Daikon Asset Management is what's called a hedge fund of funds. So sometimes you have a hedge fund that goes in and they manage the asset directly, and that's fine. But what you don't have is you don't have the high level of diversification you would if you went through a vehicle like this. In addition to that, most hedge funds, like Ben was saying at first, they require such a large investment amount. I mean, some of the funds we work with, they're at 250,000, 350,000 minimums just to get them to pick up the phone. Otherwise, they won't even look at you. The reason we built Daikon Asset Management is because we wanted to have a vehicle that serviced the accredited investor that's out there that maybe isn't worth $100 million, isn't worth 50 or even $10 million. This is an opportunity for people to get their feet wet, to dip their toe and say, I'm going to be a part of this market, but I only have to do it for a much smaller 5-digit number, 25,000, 50,000. Our minimum actually is 25,000. We expect people to be in there at least for a year. After that, they can start to redeem and request their money back. But so far, everybody that's been invested in our fund has been very, very happy because, again, we are here for steady returns. In fact, before I get to the presentation, I want to show you one thing. This right here is a website that aggregates all of the information in the life settlement industry on funds like ours that have US-based life insurance policies in their fund and are outside the United States. But what's interesting is that even the people outside the United States are still competing for the same policies that we have. Thank goodness we have the access that we do. But what you'll notice here is that compared to the S&P 500, it absolutely kicked its butt from 2012 to 2018. And that whole time we were in a bull market, and we're still in a bull market. And what's great about that is you don't have to have the gastrointestinal fortitude it takes to go through these ridiculous market cycles. I mean, peak to trough here, you might be looking at a pullback in the S&P 500 of 15, 16, 17%. That's when people really start getting the itchy fingers, where you want to click the mouse and sell out of your holdings. The reason we exist today is to give people access to something that doesn't matter what the stock market does. This is going to perform how it's going to perform. We expect it to perform somewhere between 10 and 14% year in and year out, because that's what the life settlement industry has done. But what's funny is, even if you perform at that level, you'll never make 30, 40, 50% with us, because that's not what we're here for. We're here for very low volatility. But even with that very low volatility, it still manages to kick the S&P's 500's butt. So before I get into the actual slides, because there's only a few slides and I know everybody loves seeing a good PowerPoint presentation, let me show you something else. Something that really sets us apart from a lot of these other private investments out there. And, I have nothing against private investments. I love alternatives. I have my money in some stuff that you wouldn't be able to do research on. But for those of us that maybe don't have the inclination to go out there and do all this due diligence and figure everything out and go, okay, is this Bernie Madoff or is this a legit opportunity? Well, let me show you some of the people that we have partnered with. So Daikon Asset Management has relationships specifically with these companies. I got to find out where I put it on my website. With these companies. So you see CIBC Bank over here on my website and over here on their website. They're a large multi-billion-dollar publicly traded company. They are in the United States. They're in Canada. They are our partner in the banking industry. So we don't get the money at some small Wells Fargo business-to-business bank account. It goes out to a corporate account. You have to have certain levels of clearance, and they don't just work with anybody. And you have to have a very special bank in order to move money around to satisfy all of the wires and the ACHs that go on when you're buying these assets. In addition to that, we also work with a company called NAV Consulting. NAV Consulting, my website, their website, the reason they exist is because they're managing and administrating over $120 billion. In fact, I was on the phone just last week talking to this company called Booths Bay, and they've got about $8 billion under management. And they also use NAV Consulting. And the reason that's important is while you're doing your due diligence, while you're Googling and trying to figure out, is this a legit deal? I encourage you to look at all of our partners, because these are large companies that would not work with just anybody. I mean, just to open up these accounts took months, because they have to do their own due diligence to make sure that they're getting with the right people. In addition to that, when money comes in, it goes into this bank account over here at CIBC Bank, but we actually cannot move it. So if I call them up and says, hey, we just got 100,000, I want to buy a boat. We can't buy a boat. We can only invest in the life settlement space. And that's just so important, because you need to have confidence that your money is where it's supposed to be. So when it comes in, NAV Consulting is going to jump in there and say, where is this money supposed to go? We'll tell them. They'll do 3 full checks to make sure exactly what I asked for can be done. And then they'll actually set up a wire. They can't move the money either. Once that wire is set, I can go in and I can approve the wire, but at no point in time do I have full control of any of the money that comes in. And really, if you had these checks and balances back during the times of Bernard Madoff, that never would have happened, because I'll tell you, I don't really like boats, but if I ever wanted to buy one, it would be impossible for me to use this money in order to do it. Now, at the end of the year, every year, what we'll do is we'll go to Spicer Jeffries. We have a contract with them now. They do our taxes. But in addition to that, they also do our auditing services. Any of the managers we work with, they do their auditing services. The reason that's so important is you can see here on their website, they're a top 10 auditing firm in the United States. That means they know their stuff, and they're not going to cut any corners in order to get us to exactly where we need to be. So when they're looking at our books and they're making sure that our things are in order, when you finally see that results from them that says, hey, Dicon did what they're supposed to, you can rest assured that you're working with the top partners and that their word is very good. So I just want to get that out of the way, because I know when we talk about investments, there's a lot of people and opportunities out there that may not be what they seem. But one of the great ways you can do due diligence on us is just look at the partners we're associated with. They're only going to work with high quality individuals. Excuse me. So really what we're looking at here with Dicon Asset Management, this slide I've already pretty much gone through, so I'm going to skip it. But we're talking about market insulation. We're talking about getting a return that's completely underived from anything that's publicly traded. So literally, if the S&P 500 went to zero tomorrow, my investors would still make the money they expect, because this only has to do with longevity, the longevity of the policies that we're purchasing. So anybody that's purchased anything from Equilife or another closed-end life settlement transactional situation, this is exactly the same thing, except just at a very high finance level. The people that are invested in the life settlement space on the hedge fund side are your family offices, are your pension funds and your trust funds. The reason those places invest in this industry is because they need to know that their money is 10 years from now, 30, 40, 50 years from now, it's still going to be there, because they go on into perpetuity. They're not humans. They don't just and eventually take all the money out and annuitize it. They need to make sure that it's there. And that's what's been really good for them in the life settlement space. So really what we're doing here is we're looking for and developing relationships with investment managers that are very good at the life settlement space. So I'll give you an example. We work with a guy named Luke. Luke has probably between him and his partner over almost $100 million under management, and they've done billions of dollars in transactions. In fact, if you go to my website, I even say that because we want people to know that this isn't a new situation. This isn't a new marketplace. This isn't a new fund. These are people that are well vested, but they're also not 100 billion or even 2 billion or 1 billion or $500 million funds. And the reason I say that is because anybody who knows some of these very large hedge fund managers, yeah, there are hedge fund managers out there that won't even talk to you unless you got 50 million to invest. And that's because they've just gotten so big. And really what we're trying to accomplish is develop relationship with the people that can allow our accredited investor base to get in and hitch a ride over the next 7, 8, 10, 15, 20 years in the life settlement space. And it's really hard to do that if you're already so big, you're just turning people away left and right. So as we sail off into the sunset, we want to take as many of those accredited investors with us. So as we go on, let's just talk about our edge. So what is our edge? Of course, there's other life settlement companies out there, and they're doing this, and you know, they're buying policies also, and they also do some due diligence on those policies. Number one, I'm going to say that you'll probably never hear anywhere else is we have an edge for two reasons. There's only about 20 to 25 people that sit on the top of the pyramid in the life settlement space in the entire world. It's a very small space. Now, having said that, it's still a $20 billion industry as of 2020. And they expect it to be somewhere around the $60 billion range in 2025. So we've got a ton of growth in the industry to go. However, 20 billion compared to some funds that are bigger than 20 billion, that means there's a lot of upside. There's a lot of opportunity there. Now, this has always been an opportunity that was kind of in the shadow of a lot of the large publicly traded securities hedge funds. Where it is now is you've got a lot of investment managers that are going, there are a lot of policies out here. What do we do with them? And after they do all of their due diligence, they're going to send that to a third party and get an idea of what it's worth. They're going to look at those LEs and try to structure their portfolio in such a way that they continually roll over that portfolio. So they always have new money coming in from those policies maturing, so they can go buy new policies, as well as the money coming in from investors. And that's great. That is not what provides an edge, though. Everybody does that. One thing I'll tell you, we sit at the top of the pyramid. We have the contacts that are going out there and saying, hey, I'm the first person to ever look at this policy. I don't have to bid on it. I know I can get it for for below what the market is telling you that it's worth. And that's number one on our edge. Our number two edge, it's really going to be our empirical evidence on what makes a good policy. So we are working right now, and I don't know any other company that's publicly saying this, but we are using algorithmic strategies to find out what policies are really the best policy. So in other words, we're cherry picking our policies out of hundreds of policies that may come to us every few months. We're not just going by gut. We are now going by, we have empirical evidence. And really what's great about this industry is that it has not gotten to that point where everybody is competing out the opportunity. A lot of these hedge funds are still doing 10 to 15%. Where else can you make 10 to 15% and not take significant risk in stocks or bonds? It's just, I get so passionate about it because it's kind of like the last frontier of investing, and it's true diversification. So that's really our edge. But besides that, of course, we have portfolio valuation through Lewis & Ellis. They're a huge company that takes care of all of the multi-billion-dollar managers out there. We reevaluate the policies on a regular basis. We get new LEs every 3 years, just like every other company. And we expect that from every single one of our managers. And that's what we get. We're also a small, lean team. And what we've done is we've said, well, we can either hire a bunch of people to do our administration, to do our accounting, to do our books, to do this, that, and the other thing. Instead, we've only got 1 or 2 actual humans that I get to see every single day. And then the rest of our partners are contracted out to do things like our taxes or to do the accounting services, the audits, things of that nature. So really what you're getting is you're not getting a bunch of guys who put together a business and really need the money. You got people that are working smartly and hard for their investors so that they can continue to get those returns. And that way the portfolio can actually perform better because it doesn't have any strain on it. Right now, if I were not to raise another dollar, the business would go on into perpetuity and it would do very, very well. But of course, we want to grow it. We want to touch more investors. We want to give more people the opportunity to participate. So you see me here today. So as we get into the nitty gritty, this is the page you really got to want to pay attention to. So I know I've got this at 100,000. This actually should be at 25, and here it should be at 5. So what are we looking at? Well, minimum investment, $25,000. We can do IRA money. We can do cash. If you're a trust or you have a trust and you want to use that as the partner that decides to invest, we can do it that way. Accredited investors, of course. Our period for investment is a minimum of 1 year. So that just means you get in, you're going to be there for a year, you're going to enjoy those returns. And then after that, you can decide, hey, I want to stay or I want to go do something else. That's still very good liquidity in the hedge fund space. Many of these hedge funds will choose to lock you up for 3 years or more. And we've decided that because we have a very conservative strategy that can take us into the next decade, we don't need to lock people's money up for the next 3 years. The management fees here are very low, mostly because we're not trying to make 30, 40, 50% every year. We're only trying to make that kind of 10 to 15% window. And in that, we're going to charge a low management fee of 1%. So that means that there's $100,000 from somebody in there. They're going to pay about $1,000 every year on that 100,000. And the performance fee comes from what we do. So if that 100,000 turns into, say, another $12,000, 10% of that will go to the fund, and the rest will stay on the capital account of the investor. And really, that's great because what happens is if for whatever reason, hasn't happened yet, but it could happen that maybe the performance drops and maybe they go from 112,000 to 110,000. Well, as they make their way back up, it's called a high water mark. So we will not make any performance fee based on that account until it gets back above its last highest balance. And that's really to protect the investor because we want them to be motivated to stay even during the downtimes, which of course we haven't had yet, but anything's possible. And we want to make sure that we're aligned with the investors. So most of our money comes from that performance fee. And really the management fee, it's so low. Most investors have no problem paying that. Plus, it's really just there to help keep the lights on as we do our work. So you can see the rest of our partners on that page as well. Again, very, very large companies, multi-billions in what they're managing there. And they're willing to work with us, gives credence to just how legit everything here is. So I don't want to bore you with all the grimy details. I would love to have a one-on-one conversation with anybody here on this webinar. I am available. This is all my info. If you want to reach out, let's jump on a call. Let's talk about what you're looking for, and you may find a home here.
Great, thank you, Jordon. Everybody, does anyone here? You can unmute yourself or put in the chat if anybody has a quick question. We'll go ahead and answer that right now. If you don't, feel free again to reach out to Jordon. You see him here. If you don't want to write all this down, you know where I'm located because you're here on the Zoom. You could always just shoot me an email, or at the same time, send me a text or a phone call. I'm going to have Jordon, I think, on at least once a month with this. He has another company here. Is this the second one, Jordon, they're talking about, Mizuna?
Yes, sir.
This is dealing with foreign exchange. We'll go over this real quickly, but I plan on having you on probably after Thanksgiving to specifically talk about Mizuna. This is something that I think is really, really interesting. It has absolutely nothing to do with life settlements. Why don't you tell everybody what this is about?
So I'm only going to spend probably 3 minutes on this because I know everybody's time is valuable. But this is really exciting for me. So when I was a kid, maybe not a kid, maybe like young adult, I remember thinking, I want to manage a hedge fund someday. And we're obviously doing that now, but this is really near and dear to my heart. This is not for the people that want to put 25,000 into something and hope that it ticks up 1% every month into perpetuity. This is for the people that want to swing for the fences. We're really looking for ballers on this hedge fund. I'll be really honest. This is an opportunity for someone to absolutely crush it. We've got two different assets, two different classes of stock, in this fund. It's set up the same way as Daikon. It's got a much higher management fee, but we have a manager that we're working with here. His name's Garrett, and he has been crushing the market for the last 5 years. Been in the business for 10, and let me just take you right to one of my favorite pages here on this presentation. Okay. So this right here is his personal, his what we call friends and family fund. So he has a fund that he's been managing for the last 5 years from literally friends and family. It averages 2 to 4% a month, and that's with almost no volatility. I checked all of his numbers myself. And I am a trader. I'm actually a day trader. I like to trade the markets there in the morning, here and there. And I can tell you, this is some of the best trading I've ever seen. We actually like to call it the Steady Eddie Fund because this guy has not taken a monthly loss for the last 33 months. And you can see right there in plain English, his best year, 2020, 45, almost 46%. His worst year was back in 2016 at 20% for the year. So he is absolutely crushing the market. Again, this is not for grandma that wants to put in 50,000 and just, do a little something. This is very much for people that understand, maybe not foreign currencies, but understand that this is a chance for them to really swing for the fences. We have a Steady Eddie fund. We're going to try to make just 2 to 4% like we've been doing for the last 5 years, and a swing for the fences fund. That one we expect to make some 3 to 4 return on whatever A does. So if A does 3%, we want to make 9 to 12% that month.
Awesome. Does anyone have any questions on that? We will have more on Mizuna probably after Thanksgiving, where he can get a little more in depth on it. Does anybody have any questions? Let me check the chat. I don't see any chat there. If anybody has a question at all, feel free to jump on the call here and just speak up. If not, again, here is Jordon's information. Please feel free to give him a call, email. At the same time, if you want and don't want to put that down, you can just shoot me an email. I'll pass it along to him, or give me a call or a text. I don't look like anyone is asking anything at this time. I don't know if that's good or bad, but
they're
hopefully,
all experts.
They're all experts and they're already ready to go.
Karen, it's
Karen
50,000.
says, what's the minimum? I believe it's 25 on any of these, right? To start, correct?
50 for my Zuna.
50 for my Zuna, 25 for the other. And remember, everyone here, you can use IRA funds, and it's the same way that you've used with other companies. We would use a company called IRA Club for this. We've had really, really good success. I know some of you have dealt with other companies like IRA Services and Provident. And, I would say customer service at times with certain companies is a bit lacking. We have in different entities used IRA Club, and Jordon followed our lead by going over there. Amazing team over there. I put Jordon with people who I've worked with for 3 years. The service is great. I mean, like I literally can pick up the phone and call and I get somebody to answer because they know that we do a lot of business over there. Jordon does a lot of business over there. Solid people. So I definitely recommend them is the place to go. So you can use IRA Club over there, Roth, any of that. So once again, even though he only has a 1-year liquidity on these, meaning that you don't have to put a lot of money there and you can pull it out. Sometimes, retirement funds is just the easiest way to go because you might have a lot of buildup in the market. And this is a way to diversify your portfolio. I see there's another chat. I don't know if that's probably that was the question. That was the question. So does anyone else have any other questions? If not, I'll give it about 30 seconds. Yes, I think that was it there. Okay, everyone. I want to appreciate everyone coming on. We'll be doing another call tomorrow at 11 o'clock in the morning on this. So please, we ask all of you, send us someone your way. That's all we can ask is, even if you say, not for me, I think, I'm a pretty solid guy. Jordon's a great person. You can see here, there is no selling. It's just explaining. Please let your friends know. We will be on the same call again tomorrow at 11. And then next week, I think I'm going to do a presentation on Roth conversion that we'll be sending out as well. During these weeks, November, December, January, we're going to be doing a lot of just kind of explaining things to people. Last week was kind of talking about life settlements in general. This week, it's more on hedge funds with Jordon. Next week, I may bring an expert on who can talk about how to do a Roth conversion. Okay. Appreciate everybody. Thank you so much for coming. And we look forward to hearing from you. And don't forget tomorrow, 11 o'clock, if you have friends, have them come on here. Okay. Thank you so much, everyone. Good night.